Vivid Seats is betting big on Las Vegas, announcing it will acquire Vegas.com in a cash and stock transaction valued at roughly $240 million. Now, the ticket platform raised its full-year guidance as well, saying that the company's business is better positioned than ever. We want to bring in Stan Chia, Vivid Seats CEO. He joins us now. Stan, it's good to see you. So let me pick up on that last point. Your business, you say, is better positioned than ever. Why?
Yeah. Hey, Shauna. Thanks for having me on the show today. Look, we've been really excited as we've continued to see trends in the industry that I think maintain the category as one that consumers are looking to prioritize their spend on. And frankly, when we look at the platform, and I'm privileged to have an amazing team that's been delivering the differentiation that we've built into the platform with the industry's only loyalty program, best customer service as recognized by Newsweek, engagement platforms like our free-to-play Game Center or our real money daily fantasy app, Vivid Picks. We've just got so many things there to take advantage of consumer demand while offering them value. And the acquisition of Vegas.com to us is another catalyst that we think is transformative for the business. And as you see that reflected in our outperformance this quarter, but perhaps more importantly, as we give preliminary guidance for next year, you can see that on a base of almost $4 billion this year, we're still going to grow top line, double digits. And more importantly, we're seeing the flow through as we've preliminary guided to 26% EBITDA growth, right? Putting us almost at $200 million in EBITDA when we started the year at closer to $100 million.
Stan, no doubt this was the summer of the experience economy, people going to concerts, whether it be Taylor Swift, whether it be Beyonce. But at the end of the day, are you seeing any pullback or moderation, at least, in prices that consumers are willing to spend to go into these experiences? Or do you expect it to remain high?
Yeah, look, it's hard to have a crystal ball, on all of this, and we're certainly cognizant of all of the other factors that are impacting, consumers and how they think about discretionary spend. As it pertains to our category, we've continued to see resiliency and strength. When you think about our business, we look at indicators like average order size of the business as a good indicator of how much demand is outpacing supply and how much consumers are willing to pay. And if you look at, I think what we put out in our earnings presentation on a year-over-year basis this quarter, we're about 10% up on average order size, when historically, if you look at that CAGR, it's more of a 3 to 4% number. So I think you're still seeing strength in the consumer in this category, and certainly a desire to prioritize their spend there.
Stan, do you think that could continue?
Yeah, look, I think the category is, again, one where consumers see this. No doubt it is discretionary spend, but there is the nature of the category, where there's just a FOMO-esque quality, and I look at myself, I love Guns N' Roses. I took my kids to Guns N' Roses this year. We've talked about Taylor Swift, an amazing performer. I think everybody wants to see that. So again, not going to be immune to the impacts on the economy, but certainly this is a category that I think consumers look to prioritize and a very differentiated one from the rest of the discretionary bucket.
What is the top thing that you're seeing consumers looking for when they come into the purchasing process right now? And I ask that because there's been a big push for just transparency in the fees and the total all-in costs, especially when you're looking to go into what's a highly coveted experience, whether it be a concert, whether it be a sporting event.
Yeah, look, I really think this category in particular, but I think across everything that consumers are looking for, they're going to look for value and value that matters to them. When you look at what we've invested in, I think transparency is really important. We have a really transparent and upfront platform where we make sure consumers are aware of what they're purchasing. We back that up with the industry's best customer service program. And, there's always conversation about fees and what's happening with fees. Look, I think we can always say, because we are dedicated and committed to it, we actually take our fees and reinvest that back into value for consumers through our rewards program. One of those components is a buy 10, get one free program, which you can equate to almost 10% back to consumers if they were to continue to come to the platform, which again is us taking fees and reinvesting them to the benefit of consumers.
Sam, when you talk about some of the demand, you mentioned the strength that clearly you're seeing for concerts like Taylor Swift, also Guns N' Roses. In your case, are you seeing that strength across categories, or are some outperforming others?
Yeah, it's a great comment. Look, we've spent time talking about concerts, as that's certainly been, I think, a really strong point in that history with iconic artists out there touring. But certainly it's across the board. When you look at the entire live event space. We're seeing strength in sports. We've talked about an amazing, emergence of MLS with Messi coming to the United States this year. We've seen women's sports, the women's NCAA finalship with Caitlin Clark, just amazing trajectory there. And you look at the comedy scene with many comedians on tour. So I think you're really seeing live events and a lot of strength there because consumers, whether it's concerts, sporting events, comedy, theater, you're just seeing it across the spectrum.
Stan, hard not to acknowledge the stock price that we've continued to track as well. I mean, the company went public via SPAC. We know that there's been a falling out of favor among equity markets with some of the SPACs that went public over 2021, which was the hot year for it. What do you believe that Vivid Seats messages to investors out there that have perhaps kind of worn off a little bit here on the companies that went public via SPAC, or even just the model that we've seen from Vivid Seats?
Yeah. I look, the SPAC is just a vehicle for which a vehicle to come to the, public markets. And so I look at us and say, yes, that was 2 years ago. Since then, we've posted 8 record quarters across the board. And when you look at the fundamental financials of our business, we are guiding, this year to closer to $4 billion. We've raised our EBITDA guidance almost over 20% since the start of the year, now with our midpoint closer to 140 in EBITDA. And if you look at the cash flow generation of our business, we're converting so much cash that, look, we just announced a great acquisition. We're really excited about, again, the catalyst that will be for many other things as we now lead in the entertainment capital of the US with Vegas.com. So I look at the fundamentals of our business. We've delivered 8 quarters of a record performance. We continue to drive both growth and profitability and cash flow. And so, I ignore really the vehicle at this point. I think we've got 2 years of proven trajectory. And I would tell investors, look, focus on the fundamentals. And I think we are a great business with a really attractive valuation today.
All right. Stan Chia, who is the Vivid Seats CEO. Stan, appreciate the time as always, and thanks for hopping on with us.
Of course. Thanks for having me.